Hi, welcome to the Market Alert for Thursday the 8th of June 2017. So today is the UK election. Get this out of the way. It's certainly going to be interesting to see how it pans out. As I said for the last few days, if Corbyn gets in, pound down, May pound up initially, of course, and then you'll get some sort of a pullback as you know, the status quo remains, unless of course the majority is very, very small. So yesterday the pound obviously waiting. It did manage to break out of this sideways move yesterday. You can see there prices breaking out, but nothing on the pound, and on the overnight you can see the market is waiting for today's results, and of course we're going to have to wait until certainly after midnight before we get some sort of a picture of what is actually going on. In the daily charts, we've still got the markets moving sideways to higher for the pound. You can see that we've got the trend still intact, the market making these rising lows, but that will only be the case if May gets in. If not, you will see this happen if Corbyn gets in. And then in the news, what have we got? Anything to move the market around? We've got the obviously the election. That's the first thing. Minimum rate euro. We've got the ECB conference. The rest I'm not really too bothered about. But we've got Draghi speaking later today as well, and he's supposed to be hinting at reining in QE. I believe that when I see it, he's in a position where he's absolutely stuffed, and he can't do anything about reining in any or stopping QE. He'll just have to keep printing for the time being. Meanwhile, on the Dow, again, as I warned yesterday, paper trade, stand aside, because you have this run up to a major event and the markets don't do a lot. And as you can see here, we had the market moving higher. This is not even 25 points, or just about 25 points, just over 25 points, sorry. Each of these individual lines is 12.5 points, so just over 25 points before the market waited for the crude oil inventories. And because of the problem in Qatar, it seems to have been a useful event now. So you can see I had a look yesterday, so let's see what the reaction is. You've got a situation here where the market forecast minus 3.5 million barrels. They expected a shortage of minus 3.1 million barrels, and we got a surplus of 3.3 million barrels. So a bit of a shocker for the market. That is actually bearish, and that is why you saw the market moving lower there. And I went and had a look at the crude oil chart just to see the reaction, and you can see there it dropped off a cliff on the news. So you can see their price is dropping over $1 a barrel. That's the 1 minute chart, just having a look, see what things are going on. And of course you've got the old adage, I'm afraid, that that bad news is good news. So you see the market going through, creating a sell signal. We know they're going to bring the market back, because that's what they do with bad news now. The market's sideways there, and again in the US you've got the testimony by the former head of the FBI, Comey, and as we go through the session, his testimony showed that there was no impropriety between, or any deals between him and Trump, and the market found that useful and moved slightly higher, but the range for the day was just a meager 76 points, and that's because the US market's waiting for the Fed's decision on interest rates next week, and we've got the UK election, which is affecting the pound. The good news is that we're close to both of these events taking place and out of the way, and then it's just a matter of watching the markets unfold and the volatility increase going forward, because there's nothing else to keep them afloat. Now it's going to be interesting on Wednesday as well. Just a heads up, a bit premature I know, but if Yellen decides not to raise rates, that will send nervousness to the market that the economy, as they've been spouting for the last goodness knows how many months, and increasing interest rates based upon the employment figures, and that there is an issue, and we could see the market move lower. If it goes up as well, that's not going to help matters either, frankly. It might get a bit of a rally back to the all-time highs, but we are reaching the point where the market isn't starting to believe the fundamentals as we saw yesterday. So that was the Dow yesterday, and that's why I said to err on the side of caution, because it's predictable that you're not going to have a situation where you're going to get a lot of volatility when the market is waiting for this sort of news. I'm just trying to there we go. So this is the Dow daily chart. Just a quick look here, see what's going on. You can see the market's sideways there, waiting for the news as we've just discussed. So let's have a quick look at the implied volatility. This also reflecting the quietness of yesterday as well, down from 8.88 to 8.80. No surprise there either. But again, this situation that we've got down here, this sideways move, as I keep mentioning, is a primer for a major move to the downside. No doubts about that. That's how it's always worked, and will continue to do so. The only difference is we've got a bit of a prolonged one going on here at the moment. Right, that will do it for today, really, because there's not an awful lot to report. The news remains the same. Billionaires now saying that they can't understand why the market's in the highs, etc. Movement into gold as well, as we head into uncertainty. And yeah, let's see how things pan out with the election first and foremost overnight. Right, that'll do it for me. As ever, thanks for watching. See you in the next one. Actually, just before I go, again, are on the side of caution today as well. If you're new, paper trade. Don't get into the market, because the market's likely to be sideways waiting for these results for all the UK general election results, which obviously is going to be fed in overnight. Right, that's it. See you in the next one.